Who does Alameda owe $1.5 billion to? Because let me tell you, banks cannot simply absorb a $1.5 billion hit. Hi guys, it's Crypto Curry, and even if you don't invest in crypto, you need to understand what's going on with the FTX collapse because this could have major implications for the US economy. I'll explain what's going on, we'll talk about which exchanges are still safe to use, and we'll talk about the future of crypto. So let's get into it! You need to understand the FTX debacle even if you have no investments in crypto because this could affect the entire US economy as well as the stock market. So let me explain exactly what's going on with FTX and why this is such a major deal for the US economy. FTX tapped into customer accounts to fund risky bets, setting up its downfall. FTX chief executive Sigmund Freud told investors this week that an affiliated trading firm owes the crypto exchange about $10 billion. Now, just off the bat, this sounds very similar to the Three Arrows Capital collapse that brought down Voyager Digital, Binance, and many others. However, in a minute, you're going to see why this is similar to the Three Arrows collapse and yet very, very different. And it all has to do with who this affiliated partner is. Crypto exchange FTX lent billions of dollars worth of customer assets to fund risky bets by its affiliated trading firm, Alameda Research. Alameda owes FTX about $10 billion. FTX extended loans to Alameda using money that customers had deposited on the exchange for trading purposes, a decision that Mr. Bankman-Fried described as a poor judgment call. All in all, FTX had $16 billion in customer assets, and they lent Alameda $10 billion of that $16 billion. Alameda then took out additional loans from other firms. And here is where we start getting into the issues with the US economy. As Alameda took out loans from other firms, some other firms are now facing massive defaults on these loans. And you're going to see that this is a major problem. As of Monday, Alameda owed $1.5 billion in loans to counterparties outside of FTX. So not only does Alameda owe FTX $10 billion, they also owe other banks $1.5 billion. Now the question is, who are these other banks? Who does Alameda owe $1.5 billion to? Because let me tell you, banks cannot simply absorb a $1.5 billion hit. We saw Credit Suisse try to absorb a $400 million hit, and it nearly led to the collapse of Credit Suisse. Now we're talking about a $1.5 billion hit to no doubt multiple banks. And as these banks have to write off these losses, that is going to cause significant losses on their balance sheets, which in turn could cause significant losses for the banks. That in turn could cause significant issues for not only the banks, but the entire US economy if in fact it was US banks that lent Alameda this $1.5 billion. Now we still don't know who actually lent that money to Alameda. That is yet to be determined. But no doubt over the next couple of days and weeks, banks will start reporting these losses, and we're going to find out exactly who took on this risk and lost this money, and just exactly who is about to get hurt. Because of the downfall with Alameda, FTX paused customer withdrawals earlier this week after it was hit with roughly $5 billion worth of withdrawal requests on Sunday. In other words, we're talking about a bank run, but on cryptocurrency assets with FTX. A bank run is when multiple customers try to withdraw their money out of a bank all at the same time, and that in turn can literally cause the collapse of a bank. In this case, it caused the collapse of a cryptocurrency exchange. FTX had struck a deal to sell itself to giant rival Binance on Tuesday, but Binance walked away from the deal the next day, saying FTX's problems were beyond our control or ability to help. Now, let's not forget that FTX just sent money to bail out Voyager Digital and BlockFi, and now it was trying to get a bailout. However, Binance, once they took a closer look at the numbers, realized that FTX was beyond saving, and that spells really bad news for the cryptocurrency world. The Securities and Exchange Commission and Justice Department are now investigating FTX following its sudden implosion this week. Now, in just a minute, you're going to understand why the Justice Department and the SEC is investigating FTX. At first, it seems like these problems have to do with Alameda research. However, in a second, you're going to realize why it's actually FTX that's being investigated, because the founder actually did some pretty sketchy things, and hopefully within a few weeks or a few months, we'll get some information from the SEC and the Justice Department whether or not what the founder did went beyond just unethical and actually fell into the world of criminal. The revelation of the loans suggests that the root of FTX's downfall lay in its relationship with Alameda. Alameda is a firm known for aggressive trading strategies funded by borrowed money. Let me translate that for you because this is very important to understand. Saying that Alameda invested in aggressive trading strategies, what that really means is Alameda took on very high risk investments. Now, the other thing that Alameda did is they used borrowed money. So why would they use borrowed money? Well, if you can take your assets you currently have, and then you can go to a bank and you can borrow more money using your assets as collateral for the money that you're borrowing. In turn, you can do something called leverage. This is known as margin for retail investors. But in the crypto world, margin is not just a 2-for-1 where you can buy twice as many stocks as you have funds deposited. In the crypto world, that leverage could go as high as 100 times. So if you have $1,000 deposited, you could theoretically buy $100,000 worth of cryptocurrencies. The amount of leverage, the amount of margin that takes place in the cryptocurrency world is far more extreme than it is in the stock trading world. And as a result, when there are losses, those losses are massive. Think about this. If you're leveraged 100 to 1 on a cryptocurrency and that cryptocurrency goes down by just 1%, you just lost your entire $1,000 investment. If that cryptocurrency goes down by 2%, you've now lost twice as much cash as you put in. And that's what's happening. That's what happened with Three Arrows Capital, and that's what's also is now happening with Alameda, is they took on these very risky investments based upon this leverage from this borrowed money from these other banks. And as soon as cryptocurrencies started to go down, these investment companies suddenly lost more than they had actually had invested. And as a result, the companies that invested in these companies, such as FTX or BlockFi and Voyager Digital, they suddenly lost everything. Now, here's the big question. We don't know just how much money has actually been lost by Alameda. We know that $10 billion was invested. We know another $1.5 billion was given to them on top of that as a loan. The question is, of that $11.5 billion, how much did they actually lose? How many assets do they actually have left? That's so far what we don't know. Now, it gets worse. And here's why this might go from beyond just a bad investment that FTX made to falling into the criminal world. Mr. Bankman-Fried founded and is the majority owner of both firms. That's right. Not only did Bankman-Fried found FTX, Bankman-Fried founded Alameda. What the heck is going on? So check this out. This is not like BlockFi and Voyager Digital. This is not like that at all, because BlockFi and Voyager Digital, when they invested in Three Arrows Capital, that was a completely separate firm that basically defrauded them. This is not what's happening in this case, okay? FTX founded, Bankman-Fried founds FTX, and then Bankman-Fried founds Alameda Research. And then Alameda Research goes out, does all these risky investments with leverage, loses a ton of money, and then Bankman-Fried comes out and says, I'm very sorry for investing customers' funds into Alameda Research. In hindsight, that was a bad decision. No, that was not a bad decision. You were not sorry. That is fraud, Mr. Bankman-Fried, because you knew exactly what you were doing. You knew that you were investing customer funds into your own company, and now that money is gone. Remember how FTX bailed out BlockFi? Well, BlockFi now says that it can no longer operate its business as usual, and they are now pausing client withdrawals in the wake of the FTX collapse. Now that FTX has collapsed, they can no longer bail out BlockFi, which means BlockFi is now collapsing again as well. And it's not just BlockFi. FTX also bailed out Voyager Digital, and now Voyager Digital has to go look for a new buyer after FTX went under. So the collapse of FTX not only affects FTX, it also affects BlockFi and Voyager Digital. We now have 3 major cryptocurrency exchanges that are out of business because of the fraud committed by Bankman-Fried, who founded FTX. At this point, the FTX collapse is looking a lot like crypto's Lehman Brothers moment. When Lehman Brothers collapsed in 2008, it sent shockwaves throughout the financial industry. It caused the stock market to fall over 15% in a 2-day period, and it triggered the massive collapse and sell-off of the US stock market, as well as stock markets across the world, as people became extremely fearful that the entire US financial system was about to collapse. Now, the saving grace from the Lehman Brothers collapse is that the Federal Reserve stepped in and started bailing out our banks. However, that is not going to happen this time. The collapse of FTX is the most consequential failure the crypto world has seen since Mt. Gox disappeared overnight in 2014. It looks likely that a new cascade of margin calls, deleveraging, and crypto company/platform failures is starting. Not ending, not getting worse, starting. What that means is all these other companies that have leveraged investments. By the way, who's one of the biggest ones left? Crypto.com. Crypto.com is one of the last companies that had major leveraged investments, and now it looks like they might be in trouble as well. The big difference between the crypto world today and the real world in 2008 is that there are no lenders of last resorts who can shore up the system with bailouts. As you might recall, in 2008, the reason that the entire U.S. economy did not collapse is because it was bailed out by the U.S. government. But in the crypto world, there are no bailouts. There is no Federal Reserve of cryptocurrency. Crypto exchanges and the banks that invested in them are on their own. There are no bailouts, which means the consequences are going to be far worse than they were in 2008 when Lehman Brothers collapsed. As I already explained, FTX, along with its sister company, Alameda Research, was ultimately brought down by the exact same thing that killed Lehman Brothers: excess leverage. As other cryptocurrency exchanges, as well as banks across the world, start to deleverage in order to take on less risk so that they can avoid collapse, This is going to cause the major sell-off of assets, both in cryptocurrency as well as the stock markets. And we've already seen Bitcoin as well as all cryptocurrencies collapse last week. We haven't quite yet seen a major sell-off in stocks yet. That is due to the fact that in the short term, we are in a period of technical bullishness. So we have some very, very strong technicals to overcome in the short term, which are pointing to very strong bullishness for the stock market. This is not going to affect the stock market yet, but it might in the future, getting into 2023. However, it has already had a major effect on cryptocurrencies, and it will continue to have a major effect on cryptocurrencies over the next few days, weeks, and months. Crypto prices are plummeting, and Bitcoin is at its lowest level since November of 2020. FTX US, which is the US arm of the troubled empire, looks like it's the only part of the empire that might still hold any value. Unfortunately, that's not true. Anybody here in the United States who tried to access FTX over the weekend quickly found out that servers were down. You could not access FTX. You cannot see updated crypto prices. You cannot do withdrawals. You can't sell crypto. You can't do anything. FTX US has been shut down. FTX US is not safe. So that statement is actually wrong. I think it was probably written before the US part of FTX started to collapse as well. Look at this part I highlighted in green. For the time being, there's relatively little contagion from the crypto world into the real economy. That might be true, but the key words there are for the time being. Why? Because we don't know who invested $1.5 billion into Alameda research. We don't know who the real world investors were who are about to get hurt. We know that there's $16 billion worth of crypto assets sitting at FTX, which can now not be withdrawn, that are gone, lost forever. We don't know who got hurt by that either. The real world effects may not have shown up yet, but they're about to. That said, the contagion within the crypto world is only getting started. That means the sell-off that we saw in Bitcoin last week, this is just the beginning. A week ago, Bitcoin was trading in the 18,000s and some days over 20,000. Today, it's just above 16,000. Bitcoin fell 25% in 2 days after the collapse of FTX. The question now is, what is the future of Bitcoin? Well, Bitcoin, along with the rest of the cryptocurrency world, will shrug off FTX's Black Swan event just like it did during the Mt. Gox collapse in 2014. This is based upon some historical analysis about how cryptocurrency gets affected and how it ultimately recovers. Despite falling 25% within days, Bitcoin is not doomed as a result of the insolvencies impacting FTX, Alameda Research, and many other major cryptocurrency companies. The history of Bitcoin is lined with such events, and the markets will recover from it just like they did in the past. Take a look at this. Back when Mt. Gox collapsed in 2011, Bitcoin fell 96%, from about $35 a coin all the way down to about $2 a coin. But then it recovered right up until the Bitfinex collapse in 2014. Bitcoin went from $2 a coin all the way up to about $1,000 a coin before it then dropped 86% down to about $200 a coin. But then in 2016, it actually rose from $200 a coin all the way up to $15,500 a coin before it collapsed again down to about $3,000 a coin, a fall of about 84%. It then recovered once again and rose all the way up to $68,000 a coin before falling 77% down to about $16,000 a coin, where it is right now. Now, notice how the most recent collapse, we're only down about 77%. And I will tell you that we have very strong support for Bitcoin at $12,500. So I personally do believe that Bitcoin will fall down to $12,500. And if Bitcoin does fall down to $12,500, that would represent a fall of 81% from highs, which would put it right within the territory of the average decline that we see from the prior collapses in Bitcoin over the past 10 years. Now, there are some who believe that Bitcoin will fall further than 12,500. Some people think it'll fall as low as $8,000 or $10,000. And certainly there are further support levels below that $12,500 level. However, 12,500 is the major support level for Bitcoin. And that is the point where once Bitcoin reaches that, I'm going to start buying into cryptocurrencies pretty heavily. Now, where would I buy? Obviously not BlockFi, not Voyager Digital, not FTX. Where would I buy them? Who's safe? Well, Crypto.com is the company that I have historically recommended because they had the largest variety of altcoins for US investors. However, Crypto.com actually participated in the same risky investing that FTX and BlockFi and Voyager Digital all participated in by offering these insane 8% staking for cryptocurrency assets. So, and the other problem with Crypto.com is they're not a public company. We don't know what their financials look like. And we do know that they are no longer marketing. They have every sign of being in major trouble. So even though I've recommended Crypto.com in the past, I would no longer recommend Crypto.com. I think there's a good chance they're in the same boat as all these other crypto exchanges. So who is safe? Well, if you are international, if you're not in the US, Binance is probably your safest bet. There are a few others that might be okay as well, maybe like KuCoin. But if you're here in the United States, then it looks like the safest bet is probably Coinbase. Coinbase has a couple of things going for it. First of all, they don't offer that ultra risky investment with that 8% staking. So it does not look like they're investing in these ultra risky things that could bring them down. Secondly, and this is probably the biggest one, is they are a public company. So with Coinbase being a public company, we know exactly what their financials look like. True, they're not making any money. They're certainly losing a lot of money. But what Coinbase has going for it is the fact that they have a ton of cash on hand. So they can probably weather any sort of major storm, any sort of major cryptocurrency downfall or cryptocurrency winter like we're currently in. And because of the huge amount of cash on hand, I do believe that Coinbase is probably your safest bet. So that is where I would buy Coinbase. Now, the final thing I'm going to say is make sure you keep your crypto on a hardware wallet. Do not keep it at the exchange, because if the exchange you're working on goes out of business, you're going to lose all your crypto. I personally use Ledger, the Ledger Nano X to store all of my cryptocurrency. So in the future, I will buy it on Coinbase. I'll store it on the Ledger Nano X. Now, I don't have any sort of affiliation with Coinbase. I don't have any partnership with them. If you buy a Ledger Nano X using my link, I get a small 10% kickback, which, kind of sort of helps. I think I made like $60 since started 2 years ago. I'm not making major money off these. I'm just trying to help you guys out. But if you want to read more about Ledger Nano X, maybe help the channel out a little bit, you can read up more about that on my resources page at stockcurry.vip/resources. That's stockcurry.vip/resources. If you got a lot out of this video, be a good friend and share this video with your friends and family so that they will know what's going on in the crypto world as well. And hit the like button and subscribe if you would be so kind. And if you want to know more about the stock market and what's going on in the economy there, then I recommend you go watch my last video that I uploaded here.